NVIDIA stock is up again, and it is absolutely single-handedly saving the market. NVIDIA, as of recording this video, is up over 16% on the day, and this has led all three of the major indices, the Dow, the S&P, and the NASDAQ, to be positive. We should really be in a down cycle in stocks right now based on historical data, and I'll talk about why in this video, but NVIDIA is keeping the rally strong. I'm excited to get into this video, but first, if you're new here, I'm Austin. I'm a co-owner at cloudbusinessqueen.com. I'm also a stock market investor. Thank you for being here. If you're brand new and you're not subscribed yet, go ahead and click that subscribe button. Become one of those 3,000 or so people. We'd love to have you here on the channel. Thank you so much for doing that. Okay, let's get into it. NVIDIA has been one of the hottest companies over the last year, over the last 5 years, over the last 10 years. Check this out. 1 year rate of return, 231%. 5-year rate of return, 1,908%. If you were one of those people that was bullish on NVIDIA in 2019, buying in the $40 range, man, you've had a great last 5 years. The market cap is about to pass $2 trillion with NVIDIA, with the stock being up 66% on a 6-month span, 31% on a 1-month span, and like we talked about earlier, about 16% of that is coming just today after they reported earnings yesterday after the bell. It was once again absolutely massive beats across the board, which is crazy because the expectations are already so ridiculously high for NVIDIA, and they're still coming in and beating those expectations. Check out this graphic for NVIDIA's revenue over the last 13 years. Absolutely ridiculous. So we get it, NVIDIA's a beast and it's bringing the whole market with it, but I'm actually surprised that the market has been able to shake off this one bit of news, and that one thing is that the Fed is going to keep rates higher for longer, and they're going to probably keep on extending the amount of time that they said they were going to keep rates at the current level they're at right now. I've seen articles that say they shouldn't even cut rates this year, and they probably won't cut rates in 2024 for the entire year. I don't know if that's true. It all depends on where those inflation numbers come in, but pretty much everything as it relates to inflation has come in higher than expected for multiple months in a row, and it seems like inflation is very, very, very sticky. I would say we're going to stay in the 3% range for multiple more months to go in the future. Do I think we'll get into the 2% range this year? Yes, I do. But I don't know if the Fed's going to cut as a result of that, because they're probably going to say, hey, what if we jump back up to the 3s? We don't want to cut and then have a jump back up into the 3s and then have inflation go out of control again. So I think they're going to keep rates higher for even longer than we thought they would. My projection was that we would see a first rate cut at the beginning of Q2. We might be seeing first rate cut at the beginning of Q3. This should be putting a lot of pressure on those higher growth tech names specifically. Anything that's high growth, anything that's mid cap, anything that's small cap. It should also be putting pressure on high debt companies. I do believe that high debt companies are feeling the pressure, but I don't think high growth companies are feeling the pressure of what's going to come through in terms of hurting consumer spending and in terms of hurting business spending. There's something called Fed lags, right? Fed lags means it takes a little while for what the Fed has done in terms of raising rates to actually come through and affect the economy. As those Fed lags start to come through, it can put pressure on revenue growth specifically. A lot of companies that are growth names are not profitable yet, right? So if the only thing they've got going for them is really crazy revenue growth, and then we see that revenue growth shrinking and shrinking and shrinking, that can be bad for a stock price. With the Fed keeping those rates higher for longer, we could get the Fed lags for a longer amount of time hitting us and more intensely hitting us. If we thought we were going to be hitting somewhere around the 4.5% Fed funds rate by the end of the year, and now we stay at 5.5 the whole year, or maybe we come down to 5%, that's going to come through and hit the economy a little bit worse than we were expecting. So what does all this mean? What it means if you're buying quality names is pretty much nothing. All it might mean is different amounts of time that you could be buying for versus just holding for, right? I'm a person that likes to buy stocks at prices I like. I don't buy a company I like at any price. I buy a company I like at the price I like. So what I think could happen as a result of this is once the Fed starts to cut rates, we might see a short-term pullback in all stocks, and specifically those high growth names. Typically when the Fed actually starts to cut rates, we get a little bit of a painful cycle before we start to move up again. That could mean buying opportunities in the stocks that you like. Is it going to be lower than the levels we're at today? I don't know. I think we could have multiple more months of a rally in the stock market, keeping on moving up slowly, honestly, just because of NVIDIA smashing their numbers like they did, especially the AI names. Somebody like a Palantir, like we like on the channel, somebody like a Snowflake, a more speculative name like SoundHound. I can see these stocks having very, very nice next 2 to 3 months until NVIDIA reports numbers again. They're very heavily linked as it relates to the stock price right now to what NVIDIA reports in the next quarter. But I'll say this for myself, I am not buying a bunch of AI names right now. I'm not out there buying NVIDIA stock. I'm not even out there buying Palantir shares. I'm not buying Snowflake shares. I'm not buying SoundHound shares, because I think it's safe to say that we've kind of entered a little bit of a hype bubble. Do I think it's warranted? Yes, but that doesn't mean I like the pricing around a lot of these AI names right now. Some AI stocks are going to be great returners and they're going to be absolute game changers. Some AI stocks are not going to be great returners and they're not going to be game changers. I think Palantir is one of those really, really quality names that's going to see that revenue growth continue to increase over 2024. 2023 was definitely the year of hardware boom in AI, and if I'm right about this, I'm not the only one that thinks this. I believe that 2024 and 2025 is going to be the software boom in terms of AI. It might take longer than that to play out than I think it will, but regardless, I think we'll start to see that run up start to happen in more of those software names. My personal play is Palantir. That doesn't mean I'm out there buying Palantir shares at any price. I built out my Palantir position in a major way. I got a lot of heat for saying this recently after they reported another smasher earnings. I'm a happy shareholder, but I'm not going to buy at any price. If we have a major pullback, yeah, of course I'll be buying more, but for now, I'm just a holder. I'm happy with my allocation. I'm excited to see how far NVIDIA can push this thing and how long they can save the market from the Fed fears and worries of higher rates for longer. I want to know if you're out there buying stocks right now. Are you buying AI names? Are you buying NVIDIA? Are you chilling on the sideline? What's your plan? Do you think we're in an AI bubble? I've heard a lot of conversations about that recently. Let me know what you think. I appreciate you being here in a major way. Thank you so much. Have an amazing day.